Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss two things. One, what is the outlook of global and Indian equity markets? Second, we will be discussing what is the outlook of dollar rupee pair and what is the ideal strategy for exporters and importers. World fifth largest economy, which is Japan, has technically entered into recession. Definition of recession means that if any country whose growth is in a negative territory for 2 quarters, technically we can say that they've entered into a recession. Generally, when economy is not doing good, at that point of time, markets, equity markets should also underperform. If you see Japanese index chart, it is trading close to all-time high. Last time it touched all-time high was in 1991. So currently also it is trading near that level. Now whether that really is sustainable or not. So basically when the economy is not doing good and technical charts are also showing that Nikkei is highly overvalued, from current level of 38,000 we are expecting it to move towards 33,800 to 34,200. Now the same story continues with UK also, which is the 6th largest economy in the world. They have also entered into a technical recession, and there are many other problems in UK like high inflation, high cost of living and political instability. And if you see charts of UK equity index, it is also giving a clear-cut indication that charts are overvalued, their markets are overvalued, and we can expect a correction in the market. So basically 7760 remains a strong resistance for FTSE and 7440 remains a strong support. If 7440 is taken out, then we can expect 5 to 7% correction in UK index. Now let us see what is happening in US, which is the largest economy in the world. US is also facing some kind of resilience in their economy. Their debt ceiling is at the highest level. उसके कारण जो interest payment का outflow है, that is also highest. Second, credit card delinquency is at the highest level. Mortgage loan delinquency is at the highest level. Similar patterns in the chart we can identify in S&P 500. S&P 500 is also expected to correct. In S&P 500, 5050 and 5100 is going to act as a very strong resistance, and 4650 is going to act as a strong support. If 4650 is taken out, then we can expect 5 to 10% correction in S&P 500 also. इतना सब स्टोरीज में है, उसका पर्पस ये था कि what is going to happen in Indian equity markets and what an investor should do. Technically speaking, our fundamentals are better than UK, Japan and US also. If global markets fall by 10 to 15%, we are also going to correct by 5 to 7% because we cannot dealing ourselves completely from global markets. तो इस पे important aspect क्या रहेगा? जैसे small caps पे जिन्होंने invest किया है, they should technically book some profits. Second aspect ये रहेगा कि you have to keep some cash component in your hand, so when the markets fall you can invest at that point of time. Currently we are suggesting investor that at least 30 to 40% cash they should have. As far as Nifty levels are concerned, 22,100 to 22,200 is going to act as a strong resistance for the pair, and we can expect it to move towards 21,200 to 20,800. हो सकता है इंडेक्स जो है 5-7% से गिरे, पर स्मॉल एंड मिड कैप स्टॉक कैन फॉल more than that because they are trading at the highest valuation since last 15 years. Now there is a general perception in the market that if equity markets fall, then rupee might get weaker towards 83.5 or 84 kind of a level, but the answer is no. Let us understand why. Now the first reason why we expect rupee not to depreciate and we expect it to move lower is in the debt market we expect inflows to continue because Fed is going to decrease the interest rate. Till now, we have received $5 billion in debt market in last 2 months, and the flows will continue. Second reason is MSCI rebalancing is going to happen on 29. At that point of time, we are going to receive flows close to $1 billion. Third reason is RBI a strong hand. When flows were coming in, RBI was buying dollars. So we expect if there is some kind of outflow from Indian equity market, then RBI will sell at higher levels. Fourth, our trade deficit data came at 9-month low. Falling crude oil prices is going to continuously support our trade deficit. So basically we can conclude that slowly and gradually the pair is going to move towards 80 to 80 and then 80 to 50, and eventually it is going to go towards 82 kind of levels. Now the question is, what should exporters do? So the answer is, if you are a thin margin exporters, you should cover 100% on a back-to-back basis. If you are a thick margin exporters, you should maintain a hedge ratio close to 65%. If you are hedging under anticipation order, if you are hedging against confirm order, then you should hedge 80 to 85% of your exposure. And if you are an importer, you should only cover near-term imports. Say 50% of imports you can cover between 80 to 90, so like 83, which are due in next 30 days. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.